All right, so get this. We're going deep on CDSL today.
CDSL? Yeah.
You want the inside scoop on how this major player in India's financial markets is really doing. And we've got a whole stack of reports to dig through. We've got financials from February and August. There's a board meeting outcome. And we've even got some pretty interesting insights from screener.com.
We're basically playing detective here, right?
Yeah.
We're looking for clues to understand how CDSL is performing, but also why.
Okay, so this is where it gets interesting. CDSL isn't your everyday run-of-the-mill company. It's what's called a market infrastructure institution.
Right.
Now, what does that even mean for investors?
Well, imagine the stock market is this massive machine, a really intricate machine with all these moving parts, right? CDSL is one of those key cogs that keeps everything running smoothly.
Yeah.
Basically, they handle the electronic holding and trading of all those securities, stocks, bonds, mutual funds, you name it.
So they're the ones making sure everything's digital, instead of those old-school paper stock certificates.
Precisely. But hold on, there's more. They're not just sticking to the basics either. They've been branching out with services that can actually directly impact your investing experience. Think e-voting for shareholders, a mobile app called Mayasi that lets you manage your investments on the go, and even e-locker services to keep all those crucial financial documents safe and sound.
They're like a one-stop shop, the ultimate digital toolbox for investors.
That's a great way to put it.
But they're not doing all this alone, right? CDSL's got a whole family of companies under its umbrella.
More like a CDSL conglomerate. We've got CDSL Ventures, they're the tech wizards, developing software and managing all that data. Then there's CDSL Insurance Repository. They're the ones bringing your insurance policies into the digital age.
Ah, so no more digging through those file cabinets for insurance paperwork. I like it.
Exactly. And if you're into commodities, gold, silver, even agricultural goods, well, CDSL Commodity Repository is there to make those transactions happen.
Wow, so they're really covering a lot of bases here.
They are.
But there's one more piece to this family puzzle, right? An associate company called, and this is a mouthful, India International Bullion Holding IFSC Limited.
IIBHL for sure.
Right, IIBHL.
Now, this one's pretty interesting. It's a holding company for a bullion exchange, basically a platform where you can trade gold and other precious metals. And get this, CDSL is making some serious investments here. They just pumped in an additional 20 crore rupees, bringing their total investment to a cool 50 crore.
They're going all in on bullion. Okay, now for the part we've all been waiting for, the financial checkup. Let's see how healthy CDSL really is.
All right, well, let's start with their consolidated audit report from December 2023. Their total income, drumroll please, over 185 crore rupees.
185 crore, that's a pretty big jump from the 132 crore they brought in during the same period last year.
It is, and part of that can be attributed to the growing number of demat accounts. Those accounts for holding all those digital securities we were talking about.
Right.
As more and more people in India start investing, CDSL benefits directly. But wait, there's more. Their profit numbers tell an even more impressive story.
Okay, I'm on the edge of my seat. Lay it on me.
For that December quarter, their profit before tax was over 116 crore rupees. Compare that to just over 83 crore the year before. And after taxes, their profit was over 85 crore rupees, up from about 62 crore.
So not only are they growing, but they're becoming more profitable too. That's a win-win.
Exactly. And this trend just keeps going strong into the June 2024 quarter. Get this, their total income skyrocketed to 286 crore rupees.
Wow, 286 crore.
And their profit after tax, a whopping 134 crore rupees.
These numbers are making my head spin. But what does all this really mean for someone thinking about investing in CDSL?
Well, let's talk about earnings per share, or EPS. That's that magic number that tells you how much profit the company is making for each share of stock.
Right.
For the December 2023 quarter, it was 8.57 rupees. By June 2024, it had jumped to 12.84 rupees.
That's a huge leap. But there's something else that caught my eye in those board meeting minutes dividends.
Oh yes, the cherry on top for shareholders. To celebrate their 25th anniversary, you see, the board of directors recommended a final dividend of 19 rupees per share, plus a special dividend of 3 rupees.
Hold on, a special dividend on top of the regular one? That's a pretty generous anniversary gift.
It is, and it brings the total payout to 22 rupees per share. Of course, this is still pending shareholder approval, but it's a pretty clear sign that CDSL is committed to rewarding its investors.
So far, things are looking pretty good. Strong financials, generous dividends, and a growing presence in the market. But are there any cracks in this seemingly perfect picture?
Well, let's get some outside perspectives. Screener.com, a stock analysis website. They highlight both the pros and cons of investing in CDSL.
Okay, let's start with the good news. What are some of the pros that Screener.com flags?
Well, for one, they point out that CDSL has practically eliminated its debt, which is a really good sign for financial stability and flexibility. Analysts are also predicting a strong upcoming quarter, so there's a sense of optimism there.
So the experts are feeling good about CDSL. Anything else catch your eye?
Their long-term performance is actually quite impressive. We're talking a 29.9% CAGR in profits over the past 5 years.
Okay, break that down for me. What does that actually mean?
Basically, their profits have been growing consistently at a phenomenal rate. They've also got a healthy dividend payout ratio of 55.3%. That means they're sharing a good chunk of their profits with shareholders.
Well, that's music to any investor's ears. But let's talk about the potential downsides. What are some of the concerns that Screener.com raises?
Well, their main concern is the stock's current valuation. It's trading at 20.1 times its book value.
Okay, so what does that actually mean in plain English? What should investors be thinking about when they see that number?
It could be a sign that the stock is overvalued. The price might be higher than what the company's assets and earnings actually justify. It's not necessarily a deal breaker, but it's definitely something to keep in mind.
Okay, so valuation, something to watch. Any other red flags?
They also point out the relatively low promoter holding of 15%.
So what does that mean? Why is that something to be concerned about?
Well, it means that the company's founders, or those initial investors, they hold a relatively small percentage of shares.
Okay.
And some investors might see that as a lack of confidence or long-term commitment from the people who actually built the company. Again, it's not necessarily a bad thing, but it's something to consider.
So we've got this mix of positive signals and some cautionary notes. But there's one more thing, right? This whole issue with a terminated depository participant called Anugrah Stock and Broking.
Right.
This is where things get a little bit more complicated. CDSL is facing an arbitration award related to some allegations of misused client securities by Anugrah. Misused client securities, that sounds pretty serious. What exactly happened here?
Well, the claimant alleges that Anugrah, as a depository participant, they mishandled or improperly used securities that were entrusted to them by their clients.
Okay.
And to make matters worse, the claimant is also pointing fingers at CDSL, alleging negligence on their part.
So they're saying CDSL didn't do enough to prevent or detect this misuse of securities.
Exactly. However, CDSL is fighting back. They're challenging this arbitration award in the High Court. They claim to have a strong case and are confident the award will be overturned.
So they're not backing down. But regardless of the outcome, won't this legal battle have some impact on their financials?
Well, CDSL says they don't expect it to affect their bottom line, but we all know legal battles can be unpredictable. And they can definitely get expensive. It's certainly something to factor in when you're thinking about their overall risk profile.
Okay, so this whole Anugrah situation definitely adds another layer of complexity to the CDSL story. It seems like they've got a lot going for them, but there are some potential pitfalls to be aware of as well.
That's why due diligence is so important for investors. It's not enough to just scratch the surface. You have to dig deeper, understand all the nuances, and weigh the potential rewards against the risks.
All right, so we've laid out all the pieces of the puzzle. In the next part, we're going to start connecting those pieces and see what kind of picture they paint for you, the investor. So we've uncovered a lot about CDSL. Their financials are looking pretty good. They're expanding. And there's even this legal hurdle they're dealing with.
Right.
But what does it all mean for someone like you, an investor? What's the takeaway here?
Well, that's the million-dollar question, isn't it? We need to understand CDSL, sure. But more importantly, we need to understand what kind of investment opportunity it presents.
So how do we even begin to figure that out? Because on one hand, CDSL seems to be doing really well financially, but then we've got this legal issue hanging over their heads, and those concerns from Screener.com.
Yeah, okay, let's try to connect the dots here. Their financial performance, those profits, the EPS growth, it's all tied to what's happening in India's capital markets.
Right.
More investors means more demat accounts, more transactions, more business for CDSL.
And let's not forget those dividends. They definitely make things sweeter for investors.
Oh, absolutely. It shows they're focused on shareholder value.
They are, but remember, no investment is completely risk-free. This legal battle with Anugrah Stock and Broking, even though CDSL says it won't affect their financials, it still adds some uncertainty.
Yep, it does.
So what could happen? What are the different scenarios here? Like, what if the High Court rules against CDSL?
It's hard to say for sure, But it could mean financial penalties, maybe some damage to their reputation, could even shake investor confidence. It's definitely something to watch closely.
Okay, so that's one risk factor to keep in mind. What about Screener.com's concerns, the valuation, and the low promoter holding? How should investors think about those?
Well, the high valuation, trading at 20.1 times book value, it tells us that market expectations for CDSL are pretty high.
Right.
The question is, are those expectations realistic? Can they actually grow enough to justify that valuation?
So investors have to decide for themselves if they believe in CDSL's potential.
Exactly.
What about the low promoter holding? Is that a big red flag?
It's not necessarily a deal breaker, but it does make you wonder about the commitment of the company's founders.
Hmm.
Why don't they have more skin in the game?
Right.
Is it a sign that they're not confident about the future? Or is there something else going on?
It's kind of a psychological thing for investors to consider.
It is.
But let's step back for a second. CDSL isn't just any company. It's a really important part of India's financial infrastructure.
It is. That's a really good point. And as India's economy keeps growing, as more people invest, CDSL is in a great position to benefit.
Right. They're the gatekeepers, the facilitators of this whole growing market.
Exactly.
So even with the risks, the long-term growth potential seems pretty strong.
Yeah, it does.
But what about those subsidiaries we talked about before? What role do they play in all of this?
Well, those subsidiaries are CDSL's way of branching out, trying new things, finding new areas to grow.
Okay.
It's like they're building an ecosystem, a network of interconnected businesses.
Makes sense.
Yeah.
Let's break it down. CDSL Ventures, their tech arm, seems pretty crucial in today's digital world.
It is. They're the ones developing the technology that makes everything work. They're driving innovation. In this day and age, you need a strong tech team, and they've got it.
And then there's CDSL Insurance Repository. They're bringing insurance into the digital world.
Right. It's a smart move. They're using their expertise in record keeping to tap into a huge market with tons of growth potential.
And then there's CDSL Commodity Repository. They're venturing into gold, silver, even agricultural commodities. That's a whole different ballgame.
It is, but that's the beauty of this strategy. They're not putting all their eggs in one basket. By diversifying, they're building a more resilient business.
And let's not forget about their investment in that bullion exchange, India International Bullion Holding.
I'm a bullion play. Think about it. India loves gold, and this move puts CDSL right in the middle of that market, a market that's deeply rooted in Indian culture and investment habits.
It's a smart move.
It is.
So their subsidiaries, their investments, they're all strategic bets on the future of finance in India.
Right.
They're not just reacting to trends, they're trying to shape the market.
They are. It's a proactive approach, and that should be attractive to investors who are looking for growth.
But we have to be realistic. Those concerns about valuation, especially that high valuation, they can't be ignored.
No, they can't.
It's a tough one because they're a financially sound company with a great growth story, but that price does make you think.
Yeah, it's the big dilemma. Do you believe the current price is a fair reflection of their potential? Or is it all hype? It comes down to your investment philosophy and how much risk you're comfortable with.
If you're a value investor, you might be hesitant about that high price. But if you're focused on growth, you might be willing to take the risk.
Exactly. It's not just about understanding CDSL. It's about understanding yourself as an investor.
That makes a lot of sense. So we've got all this information. What are the key takeaways for investors when it comes to CDSL? What should they be focusing on?
Here's what I want you to remember. CDSL is a major player in a market that's growing fast. They've got strong financials, they care about their shareholders, and they're expanding. But there are risks, the legal battle, the valuation, and the low promoter holding.
Those are all important things to keep in mind.
They are.
This deep dive has been really helpful in breaking down CDSL as an investment, but there's one piece missing, right? How do we use all of this to make an actual investment decision?
That's where we're going to explore in the final part of our deep dive. We're going to shift from analysis to action, giving you the tools and insights you need to decide whether or not CDSL deserves a spot in your portfolio.
Looking forward to it. Listeners, stay tuned for part 3, where we put it all together and help you decide if CDSL is the right investment for you. Okay, so we've spent a lot of time getting to know CDSL, their financials, their growth strategy, and even the challenges they're facing.
We have.
But now the big question, the question on everyone's mind, is CDSL the right investment for you?
Well, that's where things get really personal. There's no magic answer, no crystal ball. It all comes down to what you're looking for as an investor, how much risk you can handle, and how CDSL fits into your overall plan.
So how do we even start to figure that out? There's so much information to consider, it's easy to get lost in the weeds.
It is, but let's try to simplify things.
Yeah.
First things first, think about your goals. What are you hoping to achieve with your investments? Are you in it for the long haul, looking for steady growth?
Mhm.
Or are you looking for quick gains? Maybe you're after that steady stream of income.
Well, me personally, I'm more of a long-term investor. I like companies with strong fundamentals, companies that have the potential to grow steadily over time.
Okay, so in that case, CDSL's track record, their consistent profit growth, and their position in this rapidly expanding market, that might be pretty appealing to you. Remember that 29.9% CAGR over the past 5 years? That's a really good sign that they can keep growing.
It is, but what about that valuation? Screener.com had some concerns about that, right? Didn't they say the stock might be a little overpriced?
Yeah, they did, and that's something you definitely have to consider. A high valuation can be a bit of a mixed bag. It shows that the market is optimistic about the company's future, but it also means that the price already reflects that optimism. A lot of growth is already baked in.
So if they don't meet those expectations, the price could drop.
Exactly. That's why you have to do your homework. Does the current valuation make sense based on their fundamentals, their potential for growth? Can they actually deliver?
That's a tough question. It's like trying to predict the future.
It is. Investing always has some level of uncertainty, but you can reduce that uncertainty by doing your research, by digging deeper, looking beyond the hype.
Right.
Look at their financials, check out their management team, see who they're competing with. The more you know, the better.
It's all about filtering out the noise, right?
Yeah.
Cutting through all the market chatter to figure out what the company is really worth.
Exactly. And don't forget about risk. How much are you willing to tolerate? How comfortable are you with the idea of your investments going up and down?
I'd say I'm somewhere in the middle. I know that all investments have some risk, but I'm not looking for crazy swings or overnight riches.
That's a good approach. Remember, CDSL is part of a market that can be pretty unpredictable. Economic conditions, regulations, even global events can affect their stock price. There's going to be some volatility.
So even though the potential rewards look good, investors need to be ready for some ups and downs along the way.
That's right. It's about finding that sweet spot, that balance between risk and reward, a
Yeah.
balance that works for you.
So we've talked about our goals, our risk tolerance. What's next? What else should we be thinking about when we're looking at CDSL?
Think about diversification. How would CDSL fit into your portfolio? Would it complement your other investments? Or would it create some imbalance?
That's a good point. I try to spread my investments across different sectors, different types of assets.
That's a smart strategy.
Mm-hmm.
And CDSL, because of its unique position in the market, it could actually offer some good diversification benefits. They're not tied to any specific company or industry. Their performance is linked to the overall health of India's capital markets.
So if the market does well, CDSL does well. But if the market struggles, they could struggle too.
Right. You have to understand how CDSL's performance might be connected to what's happening in the broader market. That'll help you decide if it's a good fit for your portfolio from a diversification standpoint.
Okay, I'm starting to see how all these pieces fit together. But if I wanted to learn more, where should I go? Where can investors find more information about CDSL?
Well, the best place to start is the company itself. Their website is packed with information. You can find annual reports, investor presentations, all the official filings. It's all there, straight from the source.
So no need to rely on rumors or speculation. Go straight to the horse's mouth.
Exactly. But don't stop there. Check out financial news websites like Bloomberg, Reuters, Money Control. They'll give you more insights into CDSL and the market they operate in.
What about those investment research platforms we talked about before, like Screener.com, Value Research, Morningstar?
Those are great resources too. They do all the deep analysis, they provide financial ratios, comparisons with other companies, even analyst ratings. It's like having a team of experts working for you.
So it's all about gathering information from different places, analyzing the data, and coming to your own conclusions.
That's right. Don't be afraid to really dig in, explore different perspectives, and challenge your own assumptions. The more you know, the better decisions you'll make.
This deep dive has been really eye-opening. CDSL clearly has a lot of potential, but it comes with its own set of risks and complexities.
And that's the reality of investing, isn't it? You have to weigh the potential rewards against the risks, make smart choices, and keep learning as you go.
Well, we've given you the knowledge, the insights, and the tools to do your own research. Now it's up to you to decide if CDSL is right for you.
Remember, investing is a journey, not a race. It's all about learning, making thoughtful decisions, and choosing investments that help you reach your financial goals.
And that's a wrap on our deep dive into CDSL. We hope you learned something new today and that you feel more confident about navigating the world of investing.
Happy investing, everyone!